Hi, very good evening, everybody. Let me just check this. Okay, great to have you. Great to have you guys today. Uh, and today I'm going to share another secret to you guys. And today I don't have any guests with me for this week. I am alone today, but anyway, I will ensure that this session is going to be another great session, and you will get a lot of information out of this traders talk today, which I'll share with you. Okay, today's topic is the secret banks are not telling you. And before we start, if you like to share this to your friends so that more people can actually know this secret. This is one secret which not a lot of people know. In fact, for those who knows this secret are the ones who is actually benefiting a lot financially. Yeah, and I will review in this traders talk what this secret is and why is this secret so important that the banks are not telling you their secret. Yeah. And this is a piggy bank, and piggy bank basically is actually for savings, and the best place to put your money is actually not in the bank. Yeah. And if there are people out there who are actually keeping their money in the bank, this is actually a show which you should actually see because it's very important for you. And once you actually understand what I shared today, I think tomorrow you would probably go to the bank and take all your money out. Okay, great. And before I start, I would actually like to share with you a story. Yeah, I would actually like to share with you a story, and basically this story is actually about a traditional life cycle of people like you or people like me. Yeah, and it's very common that basically we go through about how many years? 12 plus 4, about 20 years of our life cycle to actually educate ourselves to get into a profession. And we would do this 6 years at primary school, another 6 years at high school, and then we do another 4 years in university, and then we graduate with a degree. And our parents are very happy that we are going to actually achieve success. And then we move into the profession, whichever profession you are, whether you are an accountant, or you are an engineer, or you are a lawyer. For myself, I am actually an accountant by profession, and I forgot to introduce myself. I'm Meng Hon, and basically, I have actually done through an accountancy degree, and then when I started working, I actually started to work as an auditor in a big four until I qualified as a public accountant. And of course, these are actually quite common. If you're an engineer, then you practice and then you qualified as an engineer. If you're a doctor, then you actually do your interns at the hospital, and then you qualify as a doctor, an architect, a lawyer, and all. So basically, this is just what a lot of people do. And after that, basically, you move on to progress in your career. And for myself, after my career in a Big Four audit firm, I actually started to move into a bank. Okay, uh, and 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 uh, I moved into a bank, and of course, I'm not sharing with you any secrets which I have known during my 6 years working in the bank. It's actually other banking secrets which I will actually reveal to you. Nothing to do with my past work in the bank. And and of course, after that, again, when you gain more experience in a profession or in your career, then you can actually move on to other things. You can even start a business, or you can be an entrepreneur. But for myself, I moved out to the private sector, and basically today I'm actually one of the key management of MNC, and why I'm sharing this with you actually is quite important, because I want to you guys to actually resonate with a traditional life cycle of a person, of a person like you and me. Okay, and of course, when you move in your career, when you actually move in your career, you actually start to do these things. Okay, so as you progress in your career, so does your financials. Okay, your financials would actually also improve. You can see that a lot of people, when the more they earn, the more higher they are in the industry. The the more assets they actually, not assets, material things, I would say material things, they will actually get. I mean, they will have a start to actually have a nice car, and then they will start to have a nice house, and then they can start to actually have good holidays. This is my wife and my two lovely daughters. This is a picture which we have actually taken about 2 years, just 2 years back, just before the pandemic. We were having our holiday in Japan at that time. So these are the good things. These are the that you will get as and when you actually progress in your life. And of course, not forgetting your career here. Yeah, your career here. You become a successful person, and as you climb up the corporate ladder. Yeah. So of course, one thing a lot of people don't know is, basically all these things. Of course, it is actually good to you. You are happy to have all these things, but actually, it comes with a price. It comes with a price, and basically the price is uh, this is the price. This is actually the price which I have to actually pay in order to actually get the things which I shown you in the earlier slide. Okay, and if you see here, this basically is my office space. Something I think, I don't know if your office space is as beautiful as mine. So basically, this is my office space, and basically I have a tiny workspace here. You see, this workspace here is where basically I actually put my PC or my laptop when I actually start work. And why is my place this messy? Because basically, uh, I basically work between 12 to 14 hours a day. Okay, and of course, this a lot of you would actually might actually resonate to this, because the higher you go in your career, basically you are actually spending more time to actually generate the income, because you're getting also more responsibility, and the reason why your bosses pay you so much is because you need to work for it. I mean, basically, you have responsibilities, and you just need to actually get the job done. So basically, it is actually you are actually paid to give the time to your company, or to your company. Yeah, there's nothing wrong with it. Of course, it is just a way to actually make a living. Is quite okay, I would say. And of course, then it comes to the thing here, which basically you would also start to actually have job stress, because it's just the nature of it. You would bound to actually face problems in the company which you are doing. On top of that, you would also face, I would say, one thing which is actually financial stress. And why I say financial stress is because if you look at the traditional life cycle which I actually shown you, when you start to actually work, maybe you start to actually get a salary of 2,000, and when you go up your career, maybe you actually start to earn more, and some probably maybe 40,000-50,000 a month for a senior personnel in the corporation is actually quite common. But one thing to note that even if people actually earn a high salary of 40,000-50,000 a month, very common is that their expenses, their lifestyle would also increase along with their salary. And of course, if you say you start to have a car, a nice car, a BMW, for myself, and maybe some people actually start to buy a Mercedes or some Porsche or some other things. So of course, this is an asset in a way. If you have not paid for it, it's a liability. Yeah, and most people actually start to enjoy it as a liability. So that is one financial stress which I'm talking about. And then comes the house. When you first start working, maybe you rent a house, and along when you go up your corporate your career, you start to actually buy a house. Yeah, you rent a house first, or you stay with your parents. Okay, you stay with your parents, and then you would like to move out because you already have a girlfriend or boyfriend, and then you start to want to have your private life. You start to rent a house, or if you are better off in your career, you start to buy a house. Okay, again, that is one part of thing which we call a luxury, and it becomes another financial stress to you. And then goes for the other things like the holiday which I've shown you. Again, that is very enjoyable. I mean, everybody should actually take a holiday. In fact, a lot of people are already very stressed up over the past 1.5 years because they have not gone for holiday for so long. Okay, and basically for me it is also good because I don't have the financial stress. Because once you start to go for holiday with a family of 4, basically overseas, you are talking about spending at least 20 to 30,000 for a decent trip. Okay, overseas. And of course, the gain, that is something enjoyable, and it becomes a financial stress to you because you have to actually pay for it. Yeah. And this is very common. And then here comes the revelation of the secret. Okay, so what happened is when you have all these kind of things coming through your career, that comes the bank. Okay, this is where the bank comes in. Okay, the bank comes in. When you don't have money, you won't need to have a bank. Yeah, the bank also don't want to see you. You don't have money, man. I mean, if you don't have money, I mean, the bank don't have a business with you. But when you start to actually have money or your wealth grows, that is where the bank starts to actually approach you, or you may or you may need their services. Okay, what services do they provide? Of course, traditionally, a bank is where you actually keep your money. Yeah, and you need to actually remember, what I have actually said in the earlier slide. The bank is actually not the best place to put your money. I will actually explain why. But anyway, you still put the bank in money. And how many of you actually put your money or save your money in the bank? If you save your money in the bank, please comment at the comment one. If you save money in the bank, comment one. And if you don't save money, or if you have no money, if you have no money, comment two. Okay. So I want to just gauge basically out of the audience here, how many of you actually save money in the bank? Yeah, and how many of you don't save money in the bank, or you don't have money? Okay, that is also something which I would love to know. Yeah. Anyway, when it comes to bank, when I say you go along your life cycle, you have more wealth, and then you need some place to actually keep your spare cash, and that is where the banks comes in, and you start to get approached by the banks to actually offer you things like priority banking. Yeah, yeah, priority banking. Yeah, great. Wei Ling, you said that she keeps money in the bank. Okay, so continue to watch this, because I will review for those who keep money in the bank. I will review something which you need to actually know, which is very important for you. Yeah. So that comes the priority bank. Okay, and this priority bank is actually something very very unique. Okay, especially if you are a corporate person, or you are actually having a job. Okay, great. Ramesh say no money. Okay, great. So Ramesh need to see this more than the tools need to actually see this more than one. Yeah. So this priority banking is actually something very unique, and a lot of people actually aspire, I would say, aspire to actually reach this priority banking status, because when they reach this status, or when they start to actually get approached by the bank to become their priority customer, means that they have achieved success. I mean, a common priority bank in Malaysia, even the local one, not even the international one, you're basically talking about having cash, or cash fixed deposits, or some investments, about 250 to $300,000. Yeah, this is talking about cash. So they approach you to say, hey, Meng Hon, why don't you join our priority banking? We will give you top-notch service. When you go to the bank, you don't need to queue. You just come in to the priority launch. So nice. And when you come to our priority launch, we have great service for you. You don't need to queue. We will serve you coffee. Yeah, nice coffee. And then some of it even serve you juice, some even food lah. I mean, fruits or something. Yeah. So they give you a special service, not the common one where you have to actually sit and take a number and all this. So they give you a private lounge or private room where they give you extra service. So this goes to the people who have money. Yeah, and you want to achieve this status, because for myself, I also want to achieve this status, although at one point I don't have money, but this is something common people want to aspire to join priority banking. So when they join that, they feel very nice. So I mean, I also started to actually join all this priority banking, not one bank, but maybe 3 or 4 banks. And I'll tell you a secret. How to actually join 3 or 4 priority banking by just having that minimum sum of say 200,000 or 300,000. So basically, this is just what I did. You see, so it's quite funny that one banker came and tell me, hey Ming Hon, why don't you join priority banking? I mean, we just give you this service. Okay lah, I say, okay lah, never mind. What service you have? All this coffee and all this special card and all this kind of thing. Okay lah, join lah, just join lah. But you have to place. They will tell you 100,000. They'll tell you 100,000 first. You need to actually place 100,000 into cash. Cash. Yeah, talking about cash. You need to place 100,000 cash into the bank. And then later, maybe 6 months later, you can actually top it up to 250 or 300,000. So these are more the more desperate banks, like desperate salesperson or whatever you call them. So they will entice you to actually put a foot in, half your foot in, and then basically after that they will start to call you or give you service to actually offer more things for you. So then the next thing it comes is you join one, you put 100,000 in, and then after that another banker come. Okay, so when they come and then they say, hey, you have any priority banking? And I say, I already have one. Oh, never mind, then you join us, ours is better. The next one always say they are better. So this is the second one who came. They say, oh, we are better than that. That one that one local bank, we all top notch, we all international bank. join us. But then after that normally they send all these nice sales girls to come and see you, okay. So of course you just join them. So you join them, and of course you were thinking, where am I going to get another 100,000 to 100 or 200,000 to actually join them? Then they will teach you, never mind, you just take the money from the first bank, you just take everything out, and then you join us. Then you place the money to the second bank. The second bank with the same money, you take it out and you go to the second bank and you place. And then the story goes on. The third one comes, they say they are better and whatnot. Then after that, without you knowing it, you are already in most of the banks as priority customer. and funny thing is, they give you a car sticker where you can actually park in front of their banks, you see. And if you join all this priority banking, if you stick on your windscreen all this priority bank car sticker, you don't need to drive because you already cannot see what is in front of you. So I never stick all these priority bank car sticker. I only take it out from my car drawer. If I want to have a parking to buy chicken rice at just beside that bank or something, I just take it out and then I stick the sticker just to go to the chicken rice shop to actually buy chicken rice. Technically, I don't go to the bank, but without you knowing it, you're already in 4 or 5 priority banking customer. So then, of course, what happens next is that they start to say, hey, our fixed deposit promotion. Yeah, promotion. We're going to give you a very special rate. Normal rate is 1.6% a year. Normal rate 1.6% a year. As a priority customer, we will give you 2% a year. And if you lock your money in for 5 years, we will give you additional bonus. We will give you 2.5%. So for a normal person who keeps their money in the bank, moving from 1.6% to 2.5%, it is actually something very good. I would say it is very good. In fact, for me, I also put my money when I joined all this. I also put my money in the bank because, I mean, as a priority customer, you get more benefits. You just take and use their benefits besides the car sticker to buy chicken rice. Yeah. So then again, you put money in them, you get more interest. There's something very great that the bank offer you. Just take it. Yeah. And then it comes to the next stage where they start to actually give you wealth management products. They say fixed deposit is only 2.5%. We will give you unit trust. This unit trust actually does very great. This unit trust is investing in whatever China stocks or whatnot. The returns you're going to get is 20% based on historical, blah, 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 blah. Then after that, you say, wow, okay, not bad, better than 2.5%. Okay, then you start to get into the next tier of products, which is basically their mutual funds or unit trust. Yeah. Then after that, they go for more products, structured investments. Wow, these structured investments are very good. You lock in the investments for 5 years. We will guarantee you 8% per annum. How many of you think 8% is actually a very great return? Actually, 8% return is actually quite good, I would say. It's not bad. I mean, we'll guarantee you 8%. But of course, they highlight the 8%, but then something behind these structured products, because it is actually structured products, there is always a catch behind, which they don't focus so much. They will tell you, I mean, because it is their obligation to tell you, but they will tell you very softly. They will tell you very softly, and probably 9 out of 10 times you did not hear it, but as an obligation, they would have already informed you about that small caveat on the 8%, what will happen. Yeah. So basically, this is what the in the life cycle of a so-called a professional, and then it goes to how it relates to the bank. Yeah. And then what next? Okay, yeah, this is actually what I spoke about, structured investments. So this is something which I actually got from one of my bank. You can see here. Let me enlarge this a bit. You can see here. Something which I said, which is very true. Let me enlarge this. Okay, I hope you can actually see this. You can see this. Premier is I think the priority banking. Yeah. So I got this email some time ago, and basically it says here that the bank is saying that the traditional fixed deposits, which the first tier of product which they offered, are actually not good. They say that returns from traditional invest instruments like savings and fixed deposit are no longer to keep up with the rising cost of inflation. So this is what this bank sent to their priority customers and tell them that don't put money in fixed deposits, okay, because they are no longer relevant. So the first tier of products which you place with the banks are already outdated. You don't put your money there. So this is acknowledged by the bank. Yeah, not me. This is acknowledged by the bank. So this is what I got. So again, this is something which actually evolved in the banking industry. For those of you who do not know, for category number 1, okay, please take note this. If you put money in fixed deposits, if your money is in fixed deposit, take note. You need to continue to actually watch this further, as I reveal more secrets that the bank do not want you to know. But this bank is actually quite proactive. I quite like this bank because they are acknowledging that their products are already outdated. Yeah. Then comes the so this is what I said on the first tier. Fixed deposits are no longer relevant. In fact, when I did this slide, the fixed deposit rates was actually still running at 2%. But today, as I understand, the fixed deposit rates is maybe about 1.7, because I have once I knew the secret of the banks, I actually took out all my money already. I never placed money in fixed deposit, so I'm a bit out of touch what fixed deposit rates they actually are giving out. But I think it's about 1.6 to 1.7. Yeah. So 1.6 and 1.7. So they give you that kind of rate. And in today's inflation, real inflation rates, you're talking about at least I would say at least in Malaysia, running at 4%. The statistic which they report, I think is about 3%. I don't think that is a fact. I mean, you can see that if you go to a mamak stall, the Milo is already now, I don't know, 250 to 290 for a cup of Milo ice. Yeah, and maybe a year or 2 years ago, it was probably selling for 230 or 220. But you can see the prices actually changed quite a lot, and that is not 2 or 3%, is it? So I take 4% inflation. So the bank pays you 1.6. Let's put it 2. The bank pays you 2% for the money you put in the bank, and the inflation actually runs at 4%. So every year there is actually a negative 2% to your cash which you put in the bank. Every year, negative 2%. And I've calculated this for every 10 years. If the inflation just runs at 4%, and you get a fixed deposit rate of 2%, every 10 years, your wealth which you put in this priority bank or whichever bank, if you're not a priority, because this normal fixed deposits, your wealth goes down by 40%. 40%. So every 10 years, you are poorer by 40%. But remember, every 10 years of your career, you spend more time. You see, when you started work, you maybe spend 8 hours. After 9 to 5, 5 o'clock, go home because the company only pay you 2,000 ringgit. Okay, but when the company pay you 30, 40,000, after 5 o'clock, you are expected to work until you finish your work for the same salary. You see, for the same salary, they're not going to pay you overtime. So you're getting the same amount of salary for the work, the higher level you go. But when the money comes, you put in the bank, it devalues 40% every 10 years. So as you go older, yeah, you become poorer, and as you amass all these financial things like the house, the car, or the holidays, which I shown you, the more financial stress you have. So this is something which for me, I don't know whether it's fortunate or unfortunate, because I only recently, maybe about few years, 3 or 4 years ago, only about 3 or 4 years ago, I only recently found this secret out. Yeah, because I was so busy doing my work and in my career, I just focus all my attention to that lah. Yeah, that I have actually neglected on the financial side. Until only recently, because once I turned 40, right, you know, for men, right, especially married men, once you turn 40, so that is the time where you have this what do you call that, uh, um, what stress is that? I forgot the word. Yeah, you suddenly realize that stress comes once you turn 40. You're already at the mid of your career point. You see your path in front. I have another 15 years more to go before I retire. And you look at maybe your bank account or what you see. Wow, I'm already halfway my career, and this is what I have. And you look beside, you look at your wife. Wow, my wife bought a new Gucci bag. Then she wants to go for holiday in Japan next year. Want to go Europe. Then you look at your kids. Wow, now already going to school. Then your wife say, "Hey, public school no good lah. Public school, your kids are very lousy in Chinese, I should say. Very lousy. They are failing all the subjects. I think we need to actually send them to private school. Yeah. Private school better. Yeah. Better for their future. Then for me, I said, is it good? Of course, good lah. You look at how bad they are. Don't even know how to speak Chinese, but stay in the Chinese school. So these things actually started to crop up when I started to turn 40. So then again, all these things, you as a man of the house, of course, obviously say, oh, can no problem, just go, send them. So buy more bags, go for holiday. You are man of the house, you cannot say no, So you just do this, but at the back it's like, oh, am I going to pay for all this. Then comes the nice banker lah. Don't worry lah, we'll give you a credit card lah. You don't need to pay lah. 12 months, 36 months. A lot of people fall into this trap. A lot of people fall into this trap, and they start to actually amass more liability. I mean, for myself, I tried to actually find a different route out from there. Is it? Yeah. So then that completes the thing, you see. So this traditional life cycle, then you see that I was talking about all the working things which I just explained. Then at the end of your career, you know, my 15 more years where I see myself. Yeah, I see myself here. Retire broke. If I continue to do what I was actually doing, so at the end of my career, when I'm actually 60, 65 lah, 65 lah, so I retire broke. So a lot of people, what happens is that they don't retire lah. They don't retire when they are 65. They continue to they continue to work lah. I mean, for me, there's this joke in the house lah. We stayed in a gated community, you see. So of course, I had a gated community, and then I said to my children, okay lah. I mean, after I retire, I become the security guard lor. I mean, I just walk outside. I just walk outside and then become the security guard for the gated community lah. So that's where I earn my money. And I can sleep during I can also sleep during my job. So that is where I was a few years ago. I mean, basically, where I see myself doing the traditional life cycle under the old economy, and then when I retire, that's where I see myself. So that was actually quite scary. So I started to look for other things which I can actually do. I mean, yeah. So then what I have actually found is I have actually found a new economy for myself. And basically this new economy, for those who don't know, I think this is something very important for you to actually look and really study very hard lah. So the new economy nowadays, people actually take a degree for 4 years, and when they come out, they don't work. They don't work. You see, I don't know if you notice this trend lah. Before the lockdown, if you go to a shopping complex, at any time during the day, you can see actually people hanging out in Starbucks or hanging out shopping at any time during the day. You can see them. Then the next thing I guess is, what are these guys doing? Yeah, and a lot of all these are actually young people. You know, I mean, the old people are all sitting in the office, doing their work like my desk just now. So a lot of all these people are actually very young people. And basically, what are they doing? I mean, I was actually very intrigued at one point in time. I actually wanted to approach this gentleman and having a laptop in front of him, and he says, "What is he doing?" And I peeked, and I saw some charts and all these kind of things. Oh, okay. This guy must be investing or trading or something. So then I started to actually do research. What is this trading, or what is this investment about? Although I worked 6 or 7 years in the bank as an investment banker, okay, I don't trade or don't invest. Okay, so this is something which I think I have failed miserably lah. I have failed miserably in my life lah. So then I started to actually research about trading and investing. I started to actually look at YouTube and see what are all these people doing and how are they actually doing it. So I spent quite a lot of time actually doing that, and then I noticed that, well, this is something which a lot of people are doing, and the reason why they are doing it, of course, they make money. I mean, if you don't make money, and why invest and why trade? So okay, then I started to actually see how I can actually do the same. So then I started to take up courses and do trainings, go for seminars and all this to actually equip myself with a trading and investment skill. So that's what I done. Yeah. And then along the way, I also done a lot of studies and saw how this thing can be done in a much better way and more accessible way for normal people. I mean, not a lot of people can read a chart and look at stochastic RSI Bollinger Band, all these kind of things. I mean, to me, to a lot of people, it's like, oh shit, you sorry for my language. So a lot of these are actually very complicated and very difficult things. So I along the way when I started to trade and invest, I started to define and try to find a simpler way to actually trade and invest without complicating things and make it easy. I mean, make it easy. So then these people are actually doing trade and invest. They do it for 10 to 15 years, and then after that they enjoy 40 plus years of their life. So this new economy is something very interesting. That's why a lot of people are actually doing this new economy thing. They only work for 10 to 15 years. They generate the wealth hanging out in Starbucks, and then they enjoy life for 40 years. So this is something which I want to mirror. I mean, at least I have another 25 years in before I retire, right? I still can. I mean, at the end of the day, if I do this successfully, or okay, I'm actually already doing this. I mean, if people do this successfully, even if they start now, they are actually saving a lot of time. Remember, you work 40 years, you retire broke 65, whichever age you are right now, you do it for 10 to 15 years. If you are 40, you do it till 50. In fact, you don't need to actually do that so long. I mean, I'm just putting it a bit longer so that you don't think that this is a get rich quick scheme that at the end of the day, if you trade and invest, the next day you'll get rich. Yeah. So that is the new economy. And then when I said just now, I said to make things simple. Yeah. How do I make things simple in investing? Because investing is actually not rocket science. It's not rocket science. And a very a simple thing is that there are, I don't know, there are about 3 or 4,000 stocks actually listed in the US stock exchange. And I primarily invest or trade in the US stock exchange. Okay, Malaysia, I don't know anything about the Malaysian stocks. I mean, although I'm in Malaysia, but basically, the US stock market is where if you actually want to generate a lot of income, these are the companies which these are the place where you need to actually go. Why I say this is because all the big names are there, man. All the big names are there. Okay, and if you look at McDonald's, McDonald's is listed in US, Facebook is listed in US, Google is listed in US, Amazon is listed in US, Netflix is in US, Mastercard in US, Starbucks is in US, Alibaba listed in US, but the business is in China. Okay, Coca-Cola, okay, is in US, Apple is in US, Microsoft is in US. Okay, and if you look at all these companies, I'm sure all of you know all these companies. Yeah, I'm sure all of you know these companies. And why I say investing is actually not rocket science is because you invest in the company which you know, invest in the company which you use their products. Okay, you go to McDonald's every day, you log into Facebook every day. In fact, we are on Facebook now. We are on Facebook now. You Google every day. You buy things from Amazon. Yeah, maybe you buy things from Amazon. You watch Netflix every day. Every day you watch Netflix. At least for me, I don't watch now. My wife or my kids watch Netflix. Yeah, I'm Alibaba. If you ask any lady or girl or your wife, okay, Alibaba is the top the top shop which they shop lah. Yeah, Taobao or Tmall. Yeah, then Mastercard, you use Mastercard basically every day, and Starbucks. You probably go to Starbucks maybe on and off like. Yeah, I have my own Starbucks at home. Yeah, so I don't really go, but I really like Starbucks. Starbucks is actually a very very good brand name. Yeah, and Coca-Cola is my favorite lah. I mean, I practically drink Coca-Cola every 1 week. I think I drink Coca-Cola 3 or 4 times a week. And why I drink Coca-Cola 3 or 4 times a week is because I'm financially stressed. Remember, because I'm financially stressed, and the sugar from Coca-Cola actually releases this stress. And of course, today I don't drink so much Coca-Cola already. I mean, hardly in a month, maybe one time, one or two times. I mean, just because it comes free with the McDonald's value meal. So that is the time I drink Coca-Cola, because today I have no financial stress. Yeah, I have no financial stress, so I don't need to drink so much Coca-Cola. I still have work stress, but financial stress is less today. Yeah. Then of course Apple, which is something which you also use every day, which is iPhone and all this. So basically, you invest in all these company. You would not. You will not make a mistake lah. You will not make a mistake, or you will not lose money lah. I would say you will not lose money. So that is basically what investments should be lah. It should be simple, and very easy example which I actually show you is here. Why I say it's simple is because the stock market, this is actually the US stock market, S&P 500, which is the top 500 companies in the US. So the S&P today is 4,290 points, and basically this is the all-time high. You see the top here, all-time high. And if you started investing in S&P, the top 500 companies, if you just buy the top 500 companies, you can buy it individually, or you can just you cannot buy the index, but there is actually an ETF called SPY. You can actually buy, which is basically mirroring this index. You can just buy that lah. Close your eye and just buy. And for the since I don't know, this is maybe in the 80s or whatnot, you can see it only go up. Yeah. I think the average return maybe for the past 10 years is about 10%, which is okay. I mean, compared to the 1.7 or 1.6% which you get from your priority banker, this is actually 6 or 7 times better. Yeah. So the market can only go up lah. And the reason why the market can only go up is because the economy of countries can only go up. It can only go up because we would actually want better things compared to what we had 5 years ago, 10 years ago, or 20 years ago. Things will actually improve. And of course, when things improve, all these companies or businesses will also improve. Yeah. Last time McDonald's has only one shop, one shop. But today it is everywhere. I mean, thousands of McDonald's everywhere. So basically things can only improve, and because of that, the stock market over time can only go up. Yeah. Though long term it can only go up. Yeah. So if you invest today, it's 4290, maybe 10 years later it might go to 6,000 or 7,000. Yeah. So that is actually a fact which you should know. And the next one, I'm actually going through the companies. I'm actually going through the companies to show you basically what I've actually said is not just what I say. Okay. And in this thing, I'm actually doing a financial assessment here. I want you guys to actually do a financial assessment of yourself and see where you are now. And basically, if you start to actually do things different financially, where you can be, or what you are losing out by not doing this. Okay, these are the companies. These are 11 companies which I shown in the previous slide here. 11 companies. Okay. And what I have actually picked out is, I pick out the price as at 31st of December. This is actually the price. And this is a stock price as at 31st December stock price. And assuming you put 1,000 US dollar to buy at this price on 31st of December. Yeah. And you will buy, say, McDonald's price is 212. You put $1,000, you get 4.7 shares. Today the stock market is very advanced. You can already buy fractional shares. Okay, because to buy 100 shares of McDonald's, you need to pay 21,000 US dollar. A lot of people don't have $21,000 in their bank account. so we are talking about availability or accessibility of stocks in the US is actually very good now. You can put $1,000, you can buy 4.7 shares. This is what we call fractional shares. So I do all this, okay, divide all this, you buy all these shares. Facebook price at 273, you buy 3.7 shares. Okay, then I take a look at a snapshot as at yesterday. What is the stock price? Okay, Facebook as a December, McDonald's as a December was 212, and then as at yesterday it is 231. So basically, if you invest $1,000 in December, 31st of December, today your value will be 1089, and you have generated $89 of gains, which is 9% increase for six months. So 9% increase for 6 months compared to what you put in the bank, 1.7%, is definitely better. And then you see the Facebook, same thing. The 6 months return is 30%. Google is 39%. Amazon is 5.8%. Netflix is negative 1.4%. Netflix is negative 1.4%. Yeah, and then Alibaba, because Jack Ma talk too much, open up his mouth too much, then he pissed off the China government. His stocks went down, so it's 1.8%. And then Mastercard is 3.3% increase, Starbucks 5.8, Coca-Cola, because I don't drink so much Coca-Cola anymore. It did not grow so much anyway. It also grew by 0.5%. Apple 1.9%, Microsoft 21.4%. So if I just take average all this, basically for the 6 months, this pool of 11 stocks actually increased by 10.4%. Yeah. So then again, I'm just going to the math here. Bear with me. So then you talk about your current investment return, which you put the money in the bank, which they give you 1.6 or 1.7. I put it 2. I give them bonus because I'm a premier priority customer. I'm priority customer. I should get 2%. Yeah. So I put 2% here. So for $11,000, yeah, I get 2%. So for 6 months, I am actually getting interest or an income of $110. $110 for $11,000. And then if I invest in the stock market, I get a 10.4% return. With the same amount of money, I get an income of $1,144. So basically, if I compare, if you are not invested in the stock market, and if you are invested in the bank through their fixed deposits, you will actually lose out $1,000 for $11,000. You will lose out 1,000. Then I make it easier. For every $10,000, if you are not invested on the stock market up to June in the best companies around, all these 11 best companies, you will lose $940. $940, you multiply by 4 is about 4,000 ringgit. Yeah, you will lose 4,000 ringgit for every $10,000. Sorry, you lose $940 US for every $10,000 not invested. Then you go and calculate what is your wealth. You go and calculate what is the wealth or how much you are actually putting in to fixed deposits. So assuming you put $100,000 into fixed deposits, $100,000 US, you would actually lose out 9,400 US by not investing in the stock market. Yeah, so this is basically a very simple example which I show you. What are you losing out by putting your money at the wrong place? The bank is not going to tell you this. I am going to tell you this because why I tell you this, because in the past I put my money in the wrong place, and I have actually put my money there for the past 10 years. For the past 10 years, I've actually put the money at the wrong place. And this revelation, if you see it today, and if I basically save you a lot of money, for every $100,000 you have, I'm actually giving you $9,000 back by just this revelation. If you actually take action to actually look more into this tomorrow. Yeah. Okay, then comes to the thing which I've actually told you, actually want to make investments simple. And for the past year, I've actually been very busy trying to actually formulate this simple investment framework that everybody can actually follow. And I'm actually putting it out now to the public. This is actually a investment portfolio which I have actually set up just to test out what I was actually developing through an income generation framework. Like I said, it's actually an income generation framework using the best company on the US stock market. Yeah, US stock market. In fact, I also extended it through doing it through the Hong Kong stock exchange. But let's put it at the US stock market first. Yeah. So basically, most of my investment is still in the US. And basically, what happened is that I've actually opened up an account somewhere no, this is actually this year. Sorry, this is actually this year. So this year, through my income generation portfolio, why I call it income generation is because I generate income on a monthly basis with this portfolio. Okay, and from January 1st till today, basically this portfolio has actually generated a return of 22%. You can actually see here. This is actually the return of 22.6%. What you have actually saw just now on the top stocks average is actually about 10%, 10%, 10%. So what I have actually done here is I have actually improved it by almost 2 times through my income generation framework. So this was actually only for this year. And if you look at what I have actually done since last year, this so-called test portfolio using my income generation framework. I've actually opened up and did this testing in early August last year. So early August till now, basically you're talking about 11 months. And in 11 months, basically this portfolio using the income generation framework has actually generated a return of 56%. And basically this is actually a very simple framework. You only do this with the best companies. You generate income through the best companies on the stock market. This is an income generation. So basically, this portfolio actually generated 56% return in 11 months, which is compared to the 2%, which you get from the bank, which is 20, 20, 25, 26, 27, 20, 27 times better. My math is not so good. 28 times better. So that is 28 times better. If you put your money in the bank, you need to wait to generate this 28 years until you are old. But if you do it with this income generation portfolio, which I have actually formulated, we are talking about doing 28 years work with the priority banker all within 1 year. Yeah. So this is what I actually wanted to share with you today. And as I said, look at where you are putting your money in today, and look at what you can actually do in the new economy. What you can actually do in the new economy, which is to basically trade and invest in good stocks and generate income through trading and investing. We are not talking about spending hours and hours and looking at all the charts. We are talking about a very simple approach using the income generation secrets framework, which I have actually tested for the past year, and it's about to be completed, and I would be basically putting it out to the public quite soon. And of course, why am I actually doing this is mainly because I don't want people to still be stuck at the old economy. I want more people to actually get exposed to exposed to this, just like the 20 or 20-year-old kid or teenager, which has already been exposed to this kind of things much earlier than what I had. Yeah. So yeah, so this income generation secrets is going to be launched. So but you to find out more, please register your interest at this link. Please register your interest. Why you need to actually register your interest is because I'm going to actually give out a very special bonus for those people who actually register today. When it is actually launched, I'm going to actually give a very special bonus to you. And basically, what this bonus would help you is to basically help you generate a path where you can actually generate save your time and money, basically to learn how to actually generate this kind of return through a simple proven method. Like in fact, if you look here, if you can follow simple instruction, then you too can generate money income. Yeah, if so it's basically that simple. Is that simple, but a lot of people don't know it because it's actually kept as a secret. It's actually kept a secret. The bank don't want you to know this. But today I'm doing the unconventional. I'm sharing this with you, and if you want to learn how you can actually do it, like how I actually do it, please register your interest here, and I will share with you soon. It's actually very soon, to when this is actually launched. So I hope that you guys had a good informative session which I shared today, and I thank you for attending our Traders Talk, and I would be most happy to continue to actually share more information in terms of financial literacy, which basically which I am actually promoting very much, to actually teach people about financial literacy, so that they move away from the old economy into the new economy. So I'll catch up with you again in the following week when we have our next Traders Talk. For those who have actually joined, please share this to your friends who are still keeping the money with the banks, the number ones, and for the number twos, please register your interest immediately because you need this more than the number ones. Okay, so I catch up with you again. So bye bye.